Well, what do you know? Sam Bankman Fried, who's been released on bail to spend time with mommy and daddy in Northern California, apparently wasn't the Jerome Powell that people thought he was. This should be obvious now after the collapse of the fraud, FTX. But Sam Bankman Fried was considered a hero when he came and bought Robinhood stock back in May of 2022. Now, Robinhood has frequently been trading for near their cash balance as investors actually look at Robinhood and think, oh my gosh, it's possible Robinhood could light more money on fire. Even though they're trading close to their cash balance, they could light more money on fire and lose even more investor capital. And the stock has been through some heck of a roller coaster, moving from somewhere around $7 to as low as $6.81 in July, trying to move all the way up to about $12 and then right back to $7.70 where it trades today. An insane roller coaster for Robinhood stock, but one of the reasons people thought Robinhood was quite fascinating was because Sam Bankman Fried bought a lot of Robinhood shares. He bought over $500 million worth of Robinhood in May of 2022, taking a 7.6% stake in Robinhood. Yet unfortunately for Mr. Sam Bankman Fried, also known as Sam Bankman Fried, it seems like he wasn't much of a Jerome Powell, because see, Jerome Powell can print money without borrowing it and getting margin called. Unfortunately, Sam Bankman Fried actually ended up borrowing money from Alameda to finance his purchase of Robinhood shares, and now the bankrupt firm BlockFi is suing Sam Bankman Fried for his Robinhood shares, alleging that BlockFi is owed the shares that Sam Bankman Fried bought because those shares were pledged to BlockFi to guarantee that Alameda would follow through on the deal with BlockFi. Now, this is a really interesting twist because it could put substantial selling pressure on Robinhood, because obviously if BlockFi is going through bankruptcy and they're trying to survive that bankruptcy, if they can claw Sam Bankman Fried's Robinhood shares, which is probably the only net worth Sam Bankman Fried has left, if BlockFi can take those shares, it's very likely that BlockFi would dump those shares on the market. Probably not through a Robinhood kind of platform, probably through a Wall Street block trade. But the point is, there'd be a substantial increase in the amount of shares available for sale for Robinhood, and you could see a substantial shift down in Robinhood's share price. Now, that could be good news for BlockFi, as that money would then go to try to help bail BlockFi out. But this is a very interesting allegation that all of a sudden you have BlockFi suggesting that Sam Bankman Fried borrowed the money from Alameda via 4 personal promissory notes in order for him to buy shares of Robinhood. Now, when we look at the fundamentals of Robinhood, the biggest red flag that you have is that Robinhood makes money from trading, right? And when Robinhood makes money from trading, it wants to see people trade more. Problem is, when you go into a recession, people tend to do one of two things. They capitulate, sell out, and sit on the sidelines, and usually they miss the recovery, or they hodl, stop trading altogether because they're frustrated by the market. They stick their heads in the sand, maybe occasionally add by buying the dip, potentially by using diversified, actively managed ETFs or index funds or whatever, and you don't actually see much trading activity. So you have some really big red flags for trading, for investing in brokerages like Robinhood. So from a fundamental point of view, that's a big concern. Now, some other things that you have here is, I do want to see you could see transactions plummeting, right? Look at this. Transactions down 22.1%, or transaction revenue down 22.1% from the 3 months ending September 30th, 2021 to 2022. It's a big hit. Now, they are seeing a nice move up in interest revenues. However, Robinhood is kind of playing a race to the top game with to compete against companies like SoFi and Wealthfront, because Robinhood is now offering to pay somewhere over 3.7, I think it actually is 3.75% on your cash that you have deposited with Robinhood, and I think Wealthfront is now a little over 4%. So you've got a lot of big yield opportunities you're fighting with, but that's going to, in my opinion, decrease the net interest revenues for Robinhood as they start coming out with these new products, pitching, hey, we're going to offer you a larger interest rate on your savings with Robinhood. Now remember, Vlad Tenev actually came on the channel here to pitch that they were going to offer a higher yield on their interest-bearing accounts, so their checking accounts over at Robinhood, basically. And they announced this on September 23rd, which you'll notice September 23rd is actually a week before the end of this quarter. So in my opinion, the net interest revenues for Robinhood are probably going to go down because they went from paying virtually nothing to paying 3.75%. So I would not be surprised to see their transaction revenues plummet and their net interest revenues plummet. Now, the good news for Robinhood is they are trying to cut spending. Look at this, their technology and development sector, they spent $679 million in 2021 in the third quarter, only $185 here in the third quarter. They're still losing money, but only 20 cents. Could you imagine Robinhood at profitability? I don't know, when that net interest revenue goes down, probably not, but otherwise, they almost got close to profitability here, and that's why I wrote, imagine Robinhood at profitability. But again, this is a big red flag because of those net interest revenues. I think they are going to come plummeting down. So again, you'd have to cut substantially here, and you'd still be sitting in a negative situation, unfortunately. These are some notes that I took in my course member live stream with course members. We often do fundamental analysis. If you want to join in those fundamental analysis, check out the programs on Building Your Wealth link down below. There's a coupon code expiring on the 27th of December, including the Shadow Kevin for a day option. But anyway, initially, I believe that in terms of user growth, and I still believe this, the 3.75% will help a lot. It's kind of like free marketing, but unfortunately that free marketing is going to come with the downside that their net interest revenue is going to decline. So even if you were able to cut a little bit more expenses over here and you were able to bring them to profitability, which you're not exactly close to that right now, right? You have $174 million of cuts you have to do. That's like, if you had zero net interest revenue, you'd still be in a, or I'm sorry, let me put it this way. If you doubled your net interest revenue, you would still be at a loss at revenue. So I don't think you're going to, or a loss of income. So I don't think you're going to be at profitability anytime soon for Robinhood. So unfortunately, when it comes to Robinhood stock, I think you have quite a few negative catalysts ahead of you. I think that Sam Bankman Fried shares are probably going to get pummeled onto the market through bankruptcy hearings. And you could see Robinhood go to $3.50 or potentially even less. I hate to say it, but that selling pressure is going to be huge. On top of that, in the next earnings report, you're probably going to see net interest revenues plummet, potentially as low as, I would guess, a lower level than what we had over here when they were at 63 million. I hate to say it, but it could probably go below that. It would be odd for it to go up because I don't know how they would be paying out while still farming these high yields. It would really be dependent on users just for some reason not signing up for those higher yields. Of course, that's Robinhood's play, is that more people sign up for those higher yields, they pay $5 a month, and then maybe they'll start making money off of the $5 a month. But let's be real, the $5 a month belongs over here in the other section of revenue, and the other section of revenue is on a downtrend. They were at 35 mil in other rev, now they're sitting at 25. So it's just looking a little gloomy for Tesla, or not Tesla. Tesla's looking really gloomy today. That sucker's down like 11%. It's just looking really gloomy for Robinhood from a fundamental point of view. Whereas things are actually fundamentally looking great for Tesla. It's just going through hell. That's all I could describe. It is the most amount of paper handing ever. Anyway, good luck out there. Hope you appreciate some fundamentals because one day they'll come true. # not guaranteed, my opinion only. Thanks, bye.